Hi guys, welcome to this interactive section for the corporate tax overview. So we'll examine at how this overall corporate tax is structured in UAE as far as the legal framework is concerned and on which it is applicable, and also its applicability scope. So the first thing is that the corporate tax is a tax which is purely on the business profits. So you can see that it won't be a tax on the salaries or on the individual's income which is earned in their individual capacity in the form of employment income, and it would be levied straight away on the profits, which would be the business profits. So in few of the other countries we have it as a corporate income tax and business profit tax also. Just understand here that although the word business is being used, so it's not that you need to have a formal business which is incorporated here, in UAE. So if you are conducting any business activity in UAE, the corporate tax would be applicable. Example is that if you are an influencer and you are promoting the businesses on social channels, in that case also you are also doing the business activity. So in last year, in Jan 22, the Ministry of Finance here in UAE has imposed the corporate tax, which would be starting for the financial years which are starting on or after 1st of June 23. So I'll explain you in future slides also that how this overall implication will work here, but just to understand that the implication of the CT would be starting from the financial years which are starting on or after 1st of June 2023. And of course the CT here in UAE would be based on the best practices of international taxation, and it is very minimal compliance is being structured here in the CT law for the businesses. So just as we have a discussion, so if your financial year is starting from 1st of July 23, I'm just giving you an example here, and the financial year will be ending of course on 30th June 2024. So we have a cutoff that the financial years which are starting on or after 1st of June 23. So here my next financial year of course would be starting from 1st of July 23, and in this case corporate tax would be applicable from the financial year starting from 1st of July 23. It was our first case. Second scenario is that if my financial year is actually it is a calendar year, so in that scenario it will be starting on, example is 1st of Jan 23 ending on 31st December 23. So in this case, corporate tax will be applicable only from the financial year which is starting from 1st of Jan 24. So in the financial year which is 23 here, corporate tax will not be applicable. I hope it is clear. So the framework of the UAE in terms of its legal structuring is that it is a federal tax imposed, which means that it's not a tax which is imposed at the level of every Emirates here in UAE. The applicability is, it is applicable in across all the Emirates. There are certain exclusions, exemptions, which I'll explain you in our future sessions. For the administrative authority, FTA would be assuming the role of its administrative authority, and the competent authority, which means that who is issuing all the all the legislation, Ministry of Finance would be the responsible one. So here I am giving you a skeleton of the entire CT law, which is extremely handy if in future you will be getting a quick reference that in which section a specific area is being explained. So corporate law is divided into 20 sections, okay, and you can see here I have just structured it in a way which can be summarized. So I have definition and tax cases here. I have my free zones and taxable income. I have here all these are clubs, and then I have the section about the groups. So here I have it for the groups itself, and then I have an area where the tax calculation, the registration, and the registration is being explained. So all these sections are included here, and the final 4 sections are about the filing of tax returns, and then of course I have the penalties here. So here you can see that each one of the numbered item is basically a chapter in the tax law, and then each chapter of course has the articles in it. So it is just a skeleton. It is only for the understanding at how the tax law is being structured in UAE. Let's now see a very high level overview of the scope and applicability of UAE Corporate Tax. I will be calling it as CT, so for the ease of understanding. So CT will be applicable on all UAE businesses and commercial activities. So which means that if you are incorporated in UAE, whether you are in a mainland, you are in free zone, CT will be applicable. You have to file a return unless until you have been specifically be exempted out of it. So few of the exceptions on which CT will not be applicable, the exempt activities. So we have the activities who are in the extraction of natural resources in UAE, which includes your oil and gas exploration resources. So such companies are already paying a tax at the emirate level itself, so they will not be required to pay the federal tax, which is CT. So these would be exempt, and we have a separate section entirely for the exempt activities as well as on the exempt incomes, which I'll explain you afterwards. So let's have a basic test for the applicability. So you could be a business or you could be individual. So if you are a business, first check is that are you falling under the exempt category? If yes, CT will not be applicable. Pretty straightforward. So one of the exempt categories I have explained you, if you are exploring the oil and gas. Other one could be if you are a government entity, or if you are a qualifying charitable organization, and so on and so forth. So I'll explain you. So if your business here will not fall under the exempt category, of course CT will be applicable. There is no distinction that if you are a free zone entity, if you are outside free zone entity. So across the board CT would be applicable, and there could be certain changes and specific treatment for the free zone entities, of course, which I'll be explaining you afterwards. And if you are an individual, now it's very interesting. So if you are an individual, if you conduct a business, of course you incorporate a business in your own name, or even if you are conducting a business activity. So here it's very interesting that even if you are just conducting a business activity without incorporating a business, as I gave you the example earlier, if you are a social media influencer, if you are if you are conducting any business activity, you are taking funds from the company and giving them social exposure. So in that case, you are doing it and CT would be applicable. If you will not be doing any business activity, of course CT will it will not be applicable. Example could be that you are earning salary income. The other example could be you have just placed your funds in bank and you are just earning the profit out of it. So in such cases, of course, you will not be doing any of the business activity. So CT will it will not be applicable. So CT rates. Now in UAE we have 2 rates. First I'll explain you for the for the companies who are in the mainland. So just for the explanation, if you are somebody who is new to UAE, in UAE corporate structure, we can incorporate companies in a specific area which we call it free zone, which are technically treated outside of UAE. If any import is coming inside the zone, the import duty is also will not be applicable. So such areas are called the free zones, and we also call them the mainland companies. In mainland companies, of course, you can see we have 7 emirates, and in those Emirates, excluding the free zone, all area would be called as the mainland. So in that case, if you are a mainland company, you have to calculate your taxable income. Now it's very important to understand that the taxable income will not be equal to the accounting income. So accounting income could be as per your IFRS. Okay, so you start with that accounting income and then you will adjust it to to calculate the taxable income, and I'll be explaining you afterwards also that how to do this calculation. So if your taxable income is up to 375k, in that case a zero rate will be applicable. It's very important to understand that 375k is not exempted, it is charged at zero rate itself. So it means it would still be a taxable income, which means that if you are having an income up to 375k, you are still be required to file a tax return. The only advantage here is that you would not be paying any CT in this case, and then anything exceeding 375k, then we have a flat rate of 9%. So in this case, for example, if I have an income of 400k, in that case first 375k would be at 0 rate, the balance 25k would be at 9%. Next comes the free zones. Now in the free zones, we would have a qualifying free zone person, which is of course incorporated in free zone and which is meeting the substance of the free zone itself. In that case, here would be a definition in future which would be specifying the qualifying income of the qualifying free zone person. So my QI here, although it is still at present when I am doing a recording for the session, the qualifying income is still has not been specified, but just a vague idea is that it may be an income. Again, it is just assumption is that which you are just generating from within the zone. You would not be trading with a mainland company. Again, it would be clarified in due course. So once we have that clarification, then our qualifying income, if you are a free zone entity, it would be taxed at 0% itself, and the qualifying income which and the income which will not be classified as a qualified income, in that case it would just be charged flat at 9% itself. So again, free zone still is a gray area. We are still awaiting the cabinet decisions, and of course it would be explained, but as far as the treatment is concerned, it is already available with us. Okay, let's take a small example for the CT. So as I just explained you, if I have earned 400k in a given financial year, so I'm just assuming it is my taxable income. Okay, if it was my accounting income, I have to make certain changes in it, and then only I will be arriving at my taxable income. So in this case, CT ability is that I would be having first slab. First slab is from 0 to 375k. I would be charged at 0%. So it would be 0 rate. It would be CT would be 0 here up to 375k, and the income which is exceeding 375k, again it would be my taxable income. In this case, 400k minus 375k, so I have only 25k here. So in this scenario, it is only my tax is applicable on 25k only, which is in this case 2250, and it would be I have final liability of my CT. Now in this section here, I would be explaining you how to do a full-fledged calculation. I will also explain you that the final amount of CT which I will be calculating in this way, it can be reduced by any foreign taxes which are incurred on such income which I have earned from the foreign sources, and it is a very technical area. So just keep in mind that we have the option that in some cases we can adjust the foreign taxes which we have incurred in some other countries. And if UAE has a double taxation treaty with such countries, we have the option to adjust them from our final CT ability in this case. Okay, so I think it brings us to the end of our first session. I hope you enjoyed it, and there are so many other technical areas which I'll be explaining in due course.